Hey, this is Mark looking at an interesting developing trade here in Tesla with everything that's happened over the past couple of days. Now, we all know that Tesla has been in bull market mode for quite some time with higher highs and higher lows here. This again is a charting indication or definition of a bull market. Until recently, just the last couple of days, we've now seen Tesla reach, I'll change the color of my ink here actually, we've now seen Tesla go into bear market mode with lower lows and lower highs, and even break a recent support level right around the 780 price point. So now that we're more in bear market mode, I've got a strategy I think that could play out quite nicely for us, and that is expecting prices to bounce a little bit more over the next day or two, get close to the $780 level. And assuming we get up there, then we could look to buy a bear put vertical debit spread. And what that involves at that point would be, again, assuming prices get up to the 780 level approximately, we're looking at buying the March 19th 740 Tesla puts and selling the March 19th 690 Tesla puts, creating what they call a bearish put vertical debit spread. Okay, so I think that there's a pretty good chance that we'll see prices continue below our lower strike at 690 and even challenge the level that we reached just a day ago, close to 620. And I think longer term, there's an argument to be made that Tesla could go a lot lower than even $400 or $500 per share. So there's a lot more downside potential. But this is a really nice trading opportunity that's unfolding right now as we speak. So let's take a look at the at expiration option diagram here. You're looking at a trade that's approximately going to cost about $1,400. That's the worst case scenario in terms of losing. Now, if we see prices start to fall below our upper strike, again, we're going to use this upper strike at 740, okay, then we start to see our worst loss quickly, dramatically reduce. So if it just falls a little bit, like $10 below, let's say our upper strike at 740, then now instead of losing 1,400, we're only down 400. If it falls $20 below our upper strike at 740, that means it's falling down to $720 a share. We're now positive, now making $571 or $91, excuse me. If it falls $30 below our upper strike, again, that would mean prices would go down to 710. That would be $30 below our upper strike price at $740. We now have a profit of $1,597, $1,600 a share. Now, $40 below our upper strike, taking prices right down to $700 a share, would be a profit of $2,500 and $2,541 to be exact. And then you see the max profits are taking us right to $3,565. So I like this trade. I think there's a very strong possibility that we'll see Tesla lower prices near term here. But first, I think we've got a little bit more steam on this bounce. And I think that if that happens, we get back up to the 780 level, then this should play out quite nicely. And this bear put vertical debit spread could be a nice way to trade. And that saves us from having to outright buy the 740 puts for right around, call it $3,000. Instead, we could take advantage of this bear put debit vertical spread by only shelling out right around $1,400 with a max profit potential of right around $3,500. So that's the that's the take. The cost is we have a capped profit potential right around $3,500, if you will. So that's a trading idea for Tesla. More trading ideas to come. This is a really strong one, I think, on the board right now. If you're looking for a trading idea, saves us money again from having to not buy the full price $740 puts on the March series. Again, March 19th is the expiration date for both of these options, giving us about 22 days for this trade to develop. Thanks for watching, and good luck trading.